So today we're going to have a catch up on some of the news stories that have happened in the last few days, and as well as that, I'm going to talk about what I think is the number one stock to own on the stock market. I think everybody needs to have this stock in the portfolio. They reported earnings and they were very impressive, and we'll take a look at that one as well. So I hope you enjoyed the video, guys. If you could hit the like button, if you're not here, subscribe. Let's get started. So first of all, I just want to say thank you for the support on yesterday's video. A very good performing video for me, and just in general the support on the YouTube channel has been absolutely amazing the last couple of months. We've seen a really good bounce back in the subscribers, the viewers, and I just wanted to take a moment to say thank you for all you guys that are supporting the channel at the moment. What I did not do on yesterday's video when I was talking about the budget is talk about the national minimum wage increases. There was so much to talk about that I actually forgot to talk about this on yesterday's video. And what I was going to say is that minimum wage went up by 6.7% yesterday, and I was shocked by this because obviously it's great everyone getting increases to the wages, but I just looked at all these businesses at the moment that are having to do higher corporation tax, now having to do higher NI payments, and now they're having to pay, it's all right the government's setting out this minimum wage, but it's not them paying it, it's all these businesses that are having to pay up for it, and with all the extra contributions they're having to do already, and on top of that they're having to do big pay increases once again, which are 3 times the levels of inflation. It's a bit steep for these businesses, isn't it? Like, obviously I'm a fan of people getting pay increases. That's great for people to get pay increases, but you got to realise, like, this is what I was on about yesterday when I was talking about the budget, is that I think I made it not sound that bad. Like, it wasn't as bad as what I was expecting, but it was still a bad budget for businesses. Like, they got slapped big time yesterday with this budget, with the corporation tax, with the NI payments, the national wage that they're having to pay now. That's so steep for them to all pay up at once, and it is going to affect businesses from this budget. And I don't know if I played it down a little bit yesterday, but I just felt a bit sorry for businesses in general, especially some businesses are going to struggle through this. What I will also say is that there was a big increase for the national minimum wage for 18 to 20 year olds. They actually got a 16% increase on the national minimum wage, which is like 8 times inflation, which is just, that is a too big of an increase in my opinion. I'm sorry if there's 18 to 20 year olds watching this, but that's just way too big. And the other thing is, I think this is that, like, the wanted the 18 to 20 year old minimum wage to get a point to where it's not the age gap, you don't have an age gap on the minimum wages. And I just thought, well, that's just not possible, is it? Because you've got to pay 18 to 20 year olds a lower wage, because if you're a business, you're not going to take any 18 to 20 year olds on which have no experience. You're not going to take them on board and then paying them the same wage. That's the whole point of paying younger people a little bit less money, because then you go, if you're a business, why go get a 30-year-old that has done all this for 10 years, or take the risk by training up someone that is never had any work experience before and paying them the same wage? It's just not going to happen. So there's got to be that incentive for businesses to employ a younger person, and that is by having a lower wage. If you agree with it or if you don't agree with it, that's just how it's going to go. So it's all well and good and saying, oh, well, 18 to 20 year olds now get the same wage, but they're probably not going to get the job in the first place now, because no company is going to be willing to pay the same wage on someone that has no experience, and when they can get someone that's done the same job probably for many years. And I just thought that was a bit of a bad move that came out in the last 2 days, but there was so much to talk about. I actually missed it off the video the other day, to be fair. Anyway, just a quick shout out. A lot of you guys have been taking advantage of this Webull promotion that's currently going on. I'll link it in the comment section again. There's only around about 7 days left of it, so go take it while it's there and get yourself some free shares. You've got the tier 1 option, which if you do the deposit and hold it there for 90 days, you're walking away with about £40 on that, which is pretty decent. And if you do the tier 2 option, you're walking around with like 60-70 quid, which is definitely free Nando's there. So go get yourself some free shares, guys. That promotion's in the comment section. But let's get stuck on today's video. So far, a bit of a funny day yesterday, because the stock had a 7% jump, and there was a few stocks struggling a bit yesterday, but not so far. Big jump in the share price. It was actually quite funny, because I was talking about this on the Discord to the Patreon members, and I said this is why you don't judge earnings off the share price movements. You look at the financials, because this company brought out earnings and the stock dropped off earnings, and it was like, well, they were amazing. EPS beat, revenue beat, guidance hike up, but yet the stock dropped. And if you judge the movement on share price, you'd be like, oh, it's a trash stock. But if you actually look at the fundamentals of the financials, you'd have been like, that doesn't make sense. And then what we've seen within 2 days, boom, the stock has actually gone higher, and reflecting a bit more of these really good earnings that they brought out, and that's why I always look at the fundamentals and the financials. If the share price wants to do stupid things, you let it do stupid things, but you'll get rewarded in the long term. That's the point of being a long-term investor and having the patience there. But the title of this video is about this one, Google. Really impressive earnings from Google. In fact, they were so good, I actually don't know why the stock was only up 2%. I would have argued this, well, it was up a lot more, but it gave it all back. I would have argued this stock should have been up a lot more after these earnings, and they were so impressive. So EPS beat, really big beat, nearly 10% beat on EPS. Revenue of 14.9% year-over-year growth. That's very good revenue growth from Google here. Beat by 2 billion. And the more you get stuck into the results, the better they were. So we have nice growth in Google Search, YouTube Ads, Google Network. What was very impressive is the cloud growth, very good cloud growth. We had cloud growth of 35%. That's must be the most impressive growth we've seen in a long time from that Google cloud growth. And the big thing is that it's a profit beast. We've seen it from Amazon. The most profitable part of Amazon's business model is the Amazon Web Services. So when Google Cloud starts ramping up, it's going to be a big growth driver for the business. And that is clear when you look at the profitability the cloud is now putting in. It went from 266 million in profitability to 1.9 billion of profit from the cloud segment, which is very good. So yeah, that is a pretty chunky increase, something like 600%, which is very good. And profitability as a whole was pretty impressive, as operating income went up over 30%, which is very good to see. And obviously that's making the stock look cheaper and cheaper. You've got a cracking balance sheet as well here. Let's not forget, probably one of the best balance sheet, if not the best balance sheet in the world. You've only got a small amount of debt. They have so much cash to kind of throw into anything they want to do. You're getting a stock now that does pay a dividend. It's just a 5-star stock. This stock has everything that you'd want. And with Google, you're picking up at 21 times forward earnings. I actually worked these numbers out, and I actually think I got to 19 times forward earnings. So I don't know if Seeking Alpha is correct on this. So it might be even 19 times forward earnings from what I worked out earlier. I just think this is a 5-star stock. In my opinion, this is the best stock on the stock market, because you've got great growth, great profit, great drivers, great balance sheet, you get a dividend, and it's all for 19 times forward earnings. This is very good. This is what I look at so many companies, and people say, well, why don't you go buy this? Why don't you buy this? I just think the problem is I look at Google and think, I can just buy Google at 19 times forward earnings. That gives me nearly everything. To have a company that's a 2 trillion company and still putting in this growth is just very impressive. And obviously Google's a large position of mine. It's a top 5 holding, but I look at this and I just think, why is Google not my top holding? It's just a fantastic business, and I always think about, I should make it my largest position. It's the one stock that I think everybody needs to own. And realistically, yeah, I should get this to my number 1 holding in the US stock market. The only problem is that I just want it a little bit cheaper. That's the issue. I want it a little bit cheaper. If it could have a 10%, 20% drop, that'd be absolutely ideal. But I think this is a great company. I think everybody should own Google, and it should be my largest position in my portfolio as well. Hims and Hers, a few people are asking about Hims and Hers. Big drop on the stock yesterday, down nearly 14%. I did consider buying some Hims and Hers. I would like it to go a little bit lower before I do buy, but I was staring at it. I did think about buying it. It's one of those where we're back on stupid drop mode. So basically, it fell after the FDA changed the supply status on the copycat drug of the GLP-1 that Hims and Hers are doing. Yeah, we've seen this over the last 2 or 3 months. There's just been stupid volatility off it all. It's been a great time because it's given great dips to buy the stock cheap, and it's made it run up as well and sell the profit out as well at a nice time. So it's been a day trader's heaven, and that's who have been in this stock and moving it around at the moment, is all these day traders. So I'll be actually quite happy when all this is over, because the stock should go back to being hopefully a little bit more sensible on the share price. And I'm not into this stock. Well, obviously I'm into Hims and Hers. It's a big hold for me. That'll hold for the next few years. But I just don't like all the volatility over this, because the stock fell 14% yesterday when this news came out, even though that we've known that this news is going to come out anytime, and yet the stock still drops 14%. That's just all the momentum traders trying to get out of the stock right now. Next thing we know, I bet there's an article that comes out saying, it might come back onto the shortage list, and then the stock rallies. For me, I'm glad when all this is over because I just want them to get back to the fundamental of the business rather than focusing on all this GLP-1 that's going on at the moment. So I'll actually be glad when it's over and it just stops volatility and, stupid moves in the share price on news that we kind of knew what was happening. This isn't a big point for Hims and Hers. It makes up a small amount of the revenue. Let's get back to the core business, which is still growing at a very good rate. So that's why it dropped. And I'm not bothered. It doesn't change my opinion on Hims and Hers at all. Hopefully it just gets rid of the momentum traders. But during that time frame, it has created opportunities to buy at very good levels and also maybe take a bit of profit off the table as well. So more importantly, we've got earnings coming up, and that's more important than any of this. So we look forward to that. Microsoft actually fell a bit in after hours, only down 3%, but I looked at the numbers and I was actually shocked. I was like, whoa, like 16% for Microsoft, that's actually pretty good. Nice EPS beat. I think guidance was a little bit weak, but I just think I think with Microsoft, you're just at the point of view where it's like, it's just fairly valued, isn't it? Like it's 32 forward times earnings. I mean, it's good growth. I mean, what's it going to go to, 40 times earnings? I think we're just taking a little bit of a break in the stock. I mean, it's had a good year, hasn't it? Yeah, it's up 16%. So I think it's just having a little bit of a calming down phase. Nothing wrong with that in Microsoft. I mean, I remember when I was buying Microsoft, if any of you guys are watching the YouTube channel back then, I remember I was buying Microsoft in like 2017, 2018, and this stock used to trade at like 18 times earnings. How those days have changed massively. So I think it's just taking a well-deserved break. But I mean, people say, even I do it. I go, Microsoft's overvalued, but you talk about winners, just keep winning. I mean, you just look at those numbers right there. It's very impressive. Meta, I've not gone through the full numbers yet, but the stock, same for Meta, it's down 2% in the after hours. Same again, I just think it's having a little bit of a break. It's up 70% year to date. I think it's just catching up a little bit. 27 forward times earnings, so same again, it is at the richer side of the valuation, but very impressive numbers from Meta. I mean, you look at the EPS beat, over a 10% beat on the EPS, which is very good. You look at revenue growth, it was a beat by 280 million, but you're nearly at 19% revenue growth. I mean, I'd normally say that 27 forward times earnings for Meta when it used to where it used to grow like 10, 11, 12%, yeah, fair enough, but it's still not too badly valued, is it really? For a company doing these profitability and these revenue growth, it's not too bad value. That's why I've still not sold a single share of Meta, even though I'm up a very good amount on it. It's just that, I think I'm up like 200%, and I just haven't sold a share because I actually look at it and I go, the numbers they're doing and the value it's at is actually not too bad. I mean, obviously Google kind of takes the cake because you're getting nearly 15% growth and it's 21. I think it's 19 times forward earnings, so that's, very attractive. But same with Meta, like, you look at some of these big techs and not actually terribly valued when you do look at them. But I think they were just a well-deserved break here. But I don't really change the plan. And if anything, I actually think Google and Meta aren't terrible values, especially Google. To think that I'm only really off a 10-20% drop on Google, and I'd be willing to probably make it my largest position. But I think that's the reason why some of the stocks are kind of dropping, just because they just need a break. And I guess Google's probably a lower valuation as well, because obviously you got the DOJ hanging over it with the breakup, but something like that can take years to go through, so I won't really worry about that too much. But yeah, some interesting moves going on there, and if anything, I think some stocks are just taking a little bit of a break. Unless you're Google, I think you could argue the case that this is maybe a little bit of an undervalued one anyway. But just a quick recap of things there, guys. Hope you enjoyed it. If you could, hit like button. If you're new around here, subscribe, and I'll see you in a bit.